Well, I'm with no stranger to the precious metals space now. Trey Reik, thank you for coming back on the show. You were on my panel last year, and now I get to have a one-on-one with you. You are now with Bristol Gold Group, so something new there. Tell us about your career path sort of change.
Spent 4.5 years at Sprott, and I think we all figured out why I usually stay at a small company. So we've started Bristol back up, and we're working with Sprott very closely in a couple of projects near and dear to my heart, with John Hathaway and his joint venture and a couple of other things. But different perspective from Bristol, and we're happy to be back.
All right, well, we're happy to have you back in the space, ready to talk gold now. I've been saving this question for you because, you know, throughout the summer I've heard all sorts of gold calls, anything ranging from, you know, the conservative 1,600, 1,700 to 10,000, 15,000, 25,000. People who are normally conservative in the space coming out with the bold calls, I'd like to add. So where do you see yourself amongst that barometer?
Well, I've always said that you can pick the highest targets for gold when you have the most gray hair, and unfortunately I've joined the gray hair camp, so I think I can get away with it now. We had a really explosive move from, you know, 1,300 up to 1,550 in a very short period of time, from the end of May to September, and whenever that happens, people have a tendency to get reacquainted with their long-term targets on the gold price.
That's a nice way to put it.
Yeah. And of course, as soon as those targets start being flashed around, we get a nice correction, which is what we're involved in now. But we seem to be in a really positive trading pattern, clearly a breakout from what was a 2.5-year high around 1,360. So all that's very positive. I have another sort of personal predilection, which is I personally, one of the things I've learned about gold, there's no asset which has more investment cues. You know, some people think gold's an inflation hedge, a deflation hedge. Some people think it's risk on. Some people think it's risk off. You know, some people go to gold when markets get stressful. Some people go to the gold. So there's a lot of reasons people buy gold. And the other thing I've learned in all these years is that people hold these opinions very strongly, sometimes without much command of relevant fundamentals.
And would you not add, Trey, that people also have extremely high expectations for gold?
Absolutely. So what I've learned is don't try to talk anybody else out of their gold views or position or targets, because you're not going to have a lot of success. I personally believe that gold is less affected over the intermediate to long term by things such as geopolitical events, as we were just discussing earlier, Turkey and Syria this week, the trade wars. Help me out. What was the third?
Impeachment.
You know, all of these. Brexit, of course. The perennial, always present Brexit conversations. These things are important, and if people want to buy gold because of their views of those issues, that's great. It's just that, in my opinion, whenever you have sort of a geopolitical turmoil, it brings a group of people into gold who have a tendency to want to get out before we can get back to the things that really matter. So if anything, it sort of delays the main show for like 3 to 6 months.
We were talking offline. Your focus is really the Fed, though. That's what you pay attention to.
Yeah, so in my view, gold's all about monetary imbalances. If I could reduce the whole gold thesis to one chart, it would be debt to GDP. And we haven't accomplished any deleveraging in the United States, contrary to popular belief. There's this feeling that we've been deleveraging, but net, we're right at the totals of the 2009-2010 period, because the government has come in and replaced a lot of consumer debt that's been paid down and financial debt that's been paid down. But with debt this extant, the real question is, what's the Fed going to do?
Right.
I'd just take you on a brief tour of Chairman Powell's performance over the last year. In December of this past year, balance sheet reduction was on autopilot, working well and not subject to review. In January, they sort of sent feelers out that they might be open to changing that view. By March, it had been completely reversed, and balance sheet reduction was going to be abandoned in September. They didn't even wait that long, and they shut it down in July. So we went from December to July, 180 degrees on the Fed's prospects for reducing its $3.7 trillion balance sheet. Now, my point there is there's really two problems. Number one, the debt is still there, and the Fed and other central banks have to be involved to stabilize that obelisk of debt. But number two, and perhaps more concerning, I'm not terribly convinced that this particular group of stewards has any idea what they're really going to do over the long run, a coherent plan.
So do you think that President Trump is right to be frustrated when he, takes to Twitter and lambasts Powell? And
Trump is he's sort of off limits, I think, for discussion, because I have no idea whether he's the smartest guy in the world or a complete lunatic. But the pressure that he puts on the Fed, I don't really think that's a huge variable. I mean, he just wants the stock market up, and that's his way of telling them.
But no, you're absolutely right. We're obviously in this race to the bottom. So, I mean, what's your personal sentiment? Will we see negative rates here in the States?
Well, see, that's a good question. So the whole, there was a peak, I think, of 17 trillion negative yielding sovereigns. We're down to about 14. I don't think negative rates could ever be instituted in the United States because of its impact on, things like pension funds and insurance companies and fractional reserve banking. I mean, capitalism doesn't really work with negative rates. So we've had this experiment 2 to 3 years in Europe and Japan, and it hasn't produced, a lot of results that show the ends are worth the mean. So I think the negative rate experiment is nearing its conclusion.
Okay, interesting. Now, if we had to bring this back to gold, right, because this obviously impacts gold. So there is this fear of, will we enter a recession in 2020, talk of negative rates and money printing. How does this bode for the gold market and the miners? Is it, do you feel optimistic overall about the space?
I think the only thing holding gold back was the perception that the Fed could embark on its dual policy agenda of rate hikes and balance sheet reduction. Now that that's been exposed, we had that nice jump, and that's really what started this, by the way. If you go back to the end of May, what caused this had nothing to do with geopolitics. It was
everyone thought it was a trade war.
Powell saying, "Hey, we're open to to reducing rates," and I believe rates are heading to zero. I don't think we'll go negative. I think we will go back to zero or the zero bound. And we're definitely going to have some sort of asset purchases. I doubt they'll call it QE because they don't seem to want to be pigeonholed there, but there'll be something.
Okay, putting gold aside, what else do you like? Do you like silver? Palladium's looking fantastic. Anything catching your attention that we should be watching?
In every gold bull market, silver has a tendency to outperform gold at the beginning of the move and at the end, and it did that in 2016. Through August, it was up 42%. Gold was up 28%. It has a tendency to outperform. I don't have any interest in it because it's not a monetary metal. And the further we get from the 30s and centuries where silver was a reserve metal, that gold to silver ratio, in my opinion, is likely to continue to increase. So I think we're, heading to 100 to 1. The gold to silver ratio.
100 to 1.
Well, we got to 88.
Yeah, no, I know. It doesn't seem so far off, but we were hoping it was going to come lower and come closer here.
It will temporarily, at the beginning and at the end of moves, but silver is just not a monetary metal.
All right, Trey, thank you so much for your thoughts. I'm sure we'll get a lot of fan mail. And best of luck with the new venture.
Thank you very much. Appreciate it.
Come back more often and keep watching Kitco.com.
Thank you.